Good morning, traders. Welcome to BCR's Morning Market Outlook. First off, looking at the US dollar index, the dollar index climbed to 98.56, its highest level in 5 weeks, supported by safe haven demand. Although volatility remains relatively contained, geopolitical uncertainty is currently the primary driver. Technically, the index is consolidating below the 100-day moving average at 98.54 and near the 200-day moving average around 98.35. The RSI sits near 53, indicating neutral momentum, not strong bullish acceleration, but steady underlying support. Immediate resistance stands in the 98.35 to 98.54 zone, while a break below 97.65 could expose deeper downside levels. Overall, the dollar remains supported but lacks a strong momentum catalyst. Next up, we'll take a look at crude oil. Oil prices surged nearly 10%, with the U.S. crude reaching $73.20, the highest level it has been since June of 2025. The rally is driven by fears of disruption in the Strait of Hormuz, a critical global energy choke point where a large number of oil tankers are currently anchored. Although OPEC announced production increases for April, geopolitical risk is overshadowing supply adjustments. A prolonged disruption in the region could reignite global inflation pressures and potentially force central banks to reconsider their policy outlook. From a technical perspective, bulls have regained control, and price reclaimed key support near $65.56, broke above $70, and is now approaching a new resistance around $75, and the previous high near $76.74. On the downside, $70 remains the first key psychological support, followed by $67.24. Now, gold has jumped more than 2%, reaching a 1 month high near $5,420 as safe haven demand accelerates, and the metal remains in a clear uptrend and is forming a breakout structure. The key resistance zone lies between $5,392 and $5,420. A decisive break above this area could open the door toward the historical high at $5,598. From a structural standpoint, holding above the 5,300 region keeps the bullish framework intact. Initial support is seen between 5,250 and 5,226, with stronger psychological support around 5,200. Momentum remains constructive as long as prices hold above recent consolidation levels. The Australian dollar weakened towards 0.7033 as risk-sensitive currencies faced pressure from safe haven inflows into the US dollar. Escalating geopolitical tensions weighed on broader risk sentiment. On the domestic front, February manufacturing PMI was revised lower and monthly inflation data showed a decline, adding a mild pressure. Technically, however, AUD/USD remains above key moving averages and the RSI near 63 indicates underlying positive momentum despite the recent pullback. Immediate resistance lies around 0.7140 to 0.7160 with 0.7200 as the next psychological barrier. On the downside, support sits around 0.7050 and 0.6978. That's all from me today, and we'll see you in the next updates. That's all from me today.